Peter Rose, founder of Longwood Currency Trading. I have some advice that I'd like to share with you if you're a new trader or somebody thinking about getting into Forex trading, working with the currency markets. You don't have any experience other than what somebody has told you, the great riches that you can have, or you watch these silly guys driving around in their Lambos and you think that's what you're going to get. But you know that there's a lot of hype out there. And that's what makes you hesitant to get involved, because you're looking at this false picture of what these guys are painting to coerce you into thinking that you're going to take your couple of $1,000 account or whatever and turn that into a Lambo and live the good life. The good life is paying your bills and not having a concern for anything. If you want to make really big money, you've got to take really big risks. If you want to pay your light bill or enhance your job income, that's relatively straightforward. That's not only simple to do, but it's pretty simple to teach. And you have to be satisfied with that. Just try to pay your light bill. And if you can do that, then you can say, oh, I've developed some good habits and I'm consistent in my trading, because the result of that is you're paying your light bill every month from your trading. Don't try to amass money in your account. Just try to generate enough money to pay your light bill. Let's say that light bill is a couple of $100s a month, or that would take a big chunk of it and pay for it. That's a great goal to try for. Why are you worried about staging lots and compounding and running a small account to a big account and buying a new car and all that other crap that's plaguing you out there, when all you have to do is just pay the light bill? And if you can pay that light bill, you can replace your job income. And then once that's done, why not shoot for that third goal, make $1 million? Can you do that? I don't know. I've made $1 million in real estate. I was able to retire because of that, not because of my software engineering career. I didn't have the good education in currency trading when I started out. I believed all the stuff that you're watching on videos right now, and I watch on videos too, just for entertainment purposes, because I know it's stupid and hilarious. But after I lost $50,000, I stepped back from that whole thing and said, because I wasn't afraid. I mean, I'd been in real estate for 40 years. So I wasn't afraid, and I had money, but still lose $40,000 in this one starting episode of my real trading experience is a big hit. And so I stepped back from that, and I said, well, this is just this is just a problem that must have a solution. If people are so busy solving the problem without understanding what the problem is, that's probably why they're failing. And I looked at the educational market out there, and not only is most of it filled with stupid shit like Fibonacci's and Elliott Wave and RSI and all this other stuff that makes things look complicated, but people really don't know how they're trading. They don't really understand what they're doing. You have to admit that someone may know how to fool you, and so they're putting this stuff forward at you, as in guys that are driving around in the Lambos or flashing their watches or going around the world 18 times a month, showing you that you can trade from your phone. Look realistically at this. It's just a market. It's like a car lot. And you're going to go on that car lot and you're going to negotiate the price of that car. And if you're successful, you're going to drive off the lot with the car. If you're not successful, you'll go to another lot and negotiate there. And you may end up getting a bad car, and you're going to lose some money on that bad car. But you won't make that same mistake again. That doesn't prevent you from buying another car. And currency trading is the same way. You're going to make mistakes, and it's going to cost you money. So the advantage in working with somebody as a mentor or taking a course from somebody is that there's a set pattern of stuff that you do that kind of forces you to stay on a path. Unfortunately, that's not how most of the educational stuff is written out there. It's just a bunch of information, and then they just cherry pick shit off of that, show you how bright they are, but it isn't really something that you can implement. But if you step back first and say, this is the problem I'm trying to solve. I'm trying to buy a car. I'm trying to swim to the end of this pool. I'm trying to climb, get good enough that I can climb a mountain without falling down and breaking my face. You have to understand what the problem is first. You can't just throw on a pair of boots and go climb up a mountain. You could get in deep trouble. And if you start trading currencies without some guidance that's legit, yeah, you could get into trouble. You could lose your money. But there's no reason for you to do that when there are folks out there that can offer you some guidance as to how not to lose too much money until you figure out what to do. I always quote Jesse Livermore, probably one of the greatest speculators ever. But in any event, he said, the only way to get an education in the market is to invest your cash, track your results, and learn from your mistakes. Gee, what a unique process. Isn't that how you learn how to play piano or golf or poker or anything? Invest your cash, track your results, learn from your mistakes. So the key is that when you're starting out, to eliminate the fear or the uncertainty, I mean, fear is a bad word to use. I'm not afraid of trading. Of course you're not. But you have anxiety about it because you don't know. First time you got in a car to drive a car, you didn't know how to drive the car, you had anxiety. You might call that fear, but it's not really fear, it's anxiety. And that anxiety prevents you from enjoying the car ride, right? And that anxiety will prevent you from success in trading. And so the best advice that I can give you as you're starting out in your trading journey is to make sure you understand the mechanics of how to use your trading platform, and have you traded in a simulated account for probably no more than a couple of weeks, just to get the idea of how you're supposed to be managing that, and then go into the real account. And that's where you will learn from your experiences. But the advice there is to not think that you're going to pay your light bill in those initial phases of the process, right? In other words, you've got to be able to get yourself to a position where there's consistency in that trading. So you don't want to start with a lot of money, but you want to start with enough money so that it hurts a little bit if you lose. So, you know, if you trade with a mini account at $1 a point, and you lose 30 pips, which is a huge amount of money to lose on a trade, that's a pizza, that'll hurt. So you're going to learn from that. In retrospect of looking back after you have that experience and looking back over the trading that you've done, I think you'll be able to identify the places where you kind of wandered off the path. But that doesn't take care of when you're wandering around on the path. So you got to figure out some way that makes sense for you not to lose a lot of money. You know, that's Warren Buffett's advice. Rule number 1 is don't lose money, and rule number 2 is see rule number 1. And that's really pretty critical, because if you're losing money, you're losing faith in the process that you've identified that you want to trade with. And so the goal is don't lose any money. So you say, well, how do you do that? Because if I didn't lose any money, I'd be successful. Exactly. And so the idea there is learn what a stop is, learn where to put that stop as far as the distance. If you listen to some of my videos, I've explained why I have the stop level that I do, the entry stop level, where it is. Yes, you are going to lose a lot by having a short stop, but every time you lose, there was a reason why you lost. That's a learning opportunity. And then, again, you're investing your cash, you're tracking your results, you're learning from those mistakes that you make, and eventually you'll figure out that the only reason that you're losing on that short stop is because you don't really understand entry analysis. So what do you need to know in order to determine the difference between whether price is going to go against you or it's going to go in your favor from a probabilistic standpoint? I mean, it's like driving a car. How much do I have to turn the wheel in order to make that gradual turn onto the next side street? You know, you don't have to do it like this, but if you do it too slowly, you'll run into the other side. So there's a sweet spot as to how you look at and analyze the probabilities of whether price is going to continue in the direction that you need it to go in as opposed to going against you. That's the only thing you have to worry about in the beginning. Short stop, and why did it get hit? In the beginning, it's probably going to get hit because you're just ignorant of the whole trading process. The fact that you were successful in learning how to transact trades on a simulated platform, a demo account, and move things around and make trades that made money makes no, there's no connection between that and the real market. There really isn't. I've traded in a simulated account I've traded for 4 years because I lost a lot of money, and I thought, well, I need more education, I need more practice. I'll practice in this simulated account for another 3 years. Didn't do me any good at all. Didn't do any good at all. Because what happens when you do that is you keep thinking about theories of how you should structure your trading, or you listen to this guy, well, he says to do this, so you try that, and that doesn't work, so you listen to this guy, and he says to, use the engulfing candle pattern, and this guy says, oh no, head and shoulders, or RSI, or whatever it is. And so you're never going to be successful because you can't figure out your path through it. And believe me, the person that's saying he trades a swing trade basis on a head and shoulders pattern really isn't doing that. They just have figured out how not to make as many mistakes as that would overpower the number of wins that they have, and they sort of intuitively see how price action is manifesting itself, and they take the opposite side of that and they're successful. And so they say, oh, well, this sort of looks like a head and shoulders pattern after the fact. But you're not going to be able to do that in real time. You see a lot of people on there looking back and say, oh, you see this pattern, it's formed this head and shoulders pattern, and so if it breaks down through here, it's just going to keep right on doing it, which is what it did. But you don't know that, because that could simply be the start of a damped harmonic oscillator for a chattering price that will eventually turn down. But you don't know. You have to just base it on price action. You can't say it's a head and shoulders pattern, so therefore it's going to do X, because it isn't going to do that, because head and shoulders has nothing to do with it. There's economic flow and all that sort of stuff that creates some of these patterns, but you don't need to know any of that. You just need to be able to say, I don't want to do this, because when I do this, it hits that short stop. And once you figure out 3 or 4 reasons why that short stop was getting hit, you'll start to win maybe a little bit more than you lose. That doesn't mean that you're going to make money, because you can lose more when you lose than you win when you win, right? I mean, you could make $10 9 times in a row, and one time lose 200. And so the fact that your win-to-loss ratio is good is no indication of the success that you're having, because you have to have a positive outcome over the statistical number of trades that you're making in order to say, oh, okay, I've not only got a good win-to-loss ratio, but I've also got a positive expectation for the average win value that I have over the series of trades that I've done. And so your job then becomes to simply amplify that daily win value, which magnifies out over a 10 trade period, 100 trade period, or whatever it is, to some significant money. That's how you do it. Small amounts of money over a long period of time add up to a lot of money. The educators have it all wrong. They're saying you want to learn how to make more pips because that's how you make more money. That's not how you make more money. That's how you go broke. Anyway, don't get wrapped around the axle about all this stuff. It's very simple, and you can make it simple by blotting out what everybody has to say. Practice a little bit on your demo accounts so that you know how to transact business, how you make orders, the difference between a market order and a limit order, and then get in there and figure out what not to do so that you don't get stopped out. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.